So, a look at oil prices, which are close to a 7-week high. A report on industrial production showed demand may pick up. Christian Smollinger joins me from Singapore with more on that. Christian, how strong were these industry figures?
Hi, Paul. Yeah, well, it was very positive numbers that came out of China, and then the U.S. numbers, while still showing a contraction, it was less than anticipated. So people were taking that as a positive sign that the economy is going to rebound. A lot of what we're seeing in the futures market for oil is expectations. People are buying on the idea, the optimism that oil prices, that the economy is going to improve, and that's going to increase the demand for oil going forward. So really, it's not so much what's happening in the physical side at this point, but really it's kind of an expectations play right now at this point.
We have inventory figures coming out tomorrow. They became kind of less important over the last few months because there seemed to be a downward trend. Then last week, we saw quite a big pickup in crude oil inventories. What are we looking for this week?
Well, again, people were expecting to see a gain in the crude inventories. That's mainly based on a decline in the amount of refinery runs that are going to be occurring in the U.S. right now. And also, we're seeing imports starting to come up a little bit from overseas. I think it's more of just a timing situation with the way that the tankers are coming in. Gasoline inventories are expected to decline, which is sort of a seasonal trend right now at this point. It's certainly mimicking what happened last year. And we're also seeing that distillate inventories are going to rise. And that's really reflecting just the very poor demand for diesel fuel right now, as there just isn't a lot of demand for diesel fuel for freight or for trucking in the U.S. right now.
Here in Asia, though, we have seen the big Chinese refiners say they're going to keep what they call relatively high run rates in August. So demand looking strong here?
Yeah, well, especially in China, we're seeing that there was a report out from Xinhua yesterday showing that refinery rates in China are 95%. But that's really kind of juxtaposed between what you're seeing in South Korea and Japan. Japan especially is running at only about 70% of their utilization. And it's almost like a tale of two markets, really. We're seeing in Japan that the demand for fuels is going down because the population is getting older, and you're also seeing more efficiencies out of Japan. Whereas China, you're seeing the economy really booming there, and there's a lot of stimulus money going in that's helping to prop up the industrial demand, and that's really helping to boost their oil demand growth. At the same time, in China, you're also seeing a lot of stockpiling going on, both in crude oil and stockpiles.
Okay, Christian, thank you very much for that. Christian Smollinger there in Singapore.